guys, welcome back to the channel, welcome back to a new video. I want to give you a real quick update. Today is the second most important day of the week because we have FOMC meeting at 2 p.m. New York time. I think that is 8 p.m. for Frankfurt, Amsterdam, Paris, and then 7 for London. The FOMC is most likely going to raise interest rates again with 0.5% after the last 0.75%, but the meeting after, half an hour later, that is the most important one, the press conference of Jerome Powell. That will probably give us some volatility again, just like the CPI data did yesterday. All in all, 3% plus for Bitcoin, 3.3, so that's quite nice. But there might be a very swift move to the upside, and I'm going to show you a volume profile that's a little bit different than the one that we have here in the charts. So that's the one here on the right, and as you can see, this is a very big gap, meaning there is barely any trading volume. Right now we're kind of playing with that resistance right here, those few candles that you see right here, but then all the way up to approximately 19,000 there is barely any resistance, 19,150-ish. So if everything goes according to plan, the Fed will rise the interest rate to 0.5%, then I think actually it could be quite a swift, fast move to the upside. Percentage wise, that is quite the trade. We're talking then about 7.5% or 8%, depending a little bit on where we are going to end up. On the daily and on other bigger time frames, it looks like that we still have more room to the upside. It doesn't look like we have topped out at all. Also the 8 hour looks like we might have some more room to the upside. We are printing a red dot here on the 4 hourly, and you could say that this actually is a bearish divergence. Based on just this, I have not entered a trade yet. We could also just stay sideways here for a little bit and then go down. Absolutely possible, depending on what Jerome Powell is saying, and then of course this bearish divergence plays out. So far the money flow on the 4 hours still looks pretty strong, nothing crazy there, but I just want to say be careful with right now entering a short. Also on the 1 hour, look at that money flow, super strong here. Doesn't look like it's been topped out at all. RSIs are melted together. Usually they stay there for a while before we are reversing down. What you could say is, you know what, I am playing this also as a bearish divergence. If we are going higher and then failed to really continue go higher to do something like this, then you could enter a short. But I would be very careful, and I would definitely not enter a trade approximately half an hour before the FOMC meeting, because usually then it gets volatile. You see some spikes up and down, and that is usually then to shake out the traders out of their stop losses out of the trades before the actual move starts. I will not be able to trade it most likely, but I just want to give you that brief update on the smaller time frames. It still looks good, it looks strong. The fact that we hold this right here, this level at approximately 17,200, 17,700-ish, just shows that there is there are still buyers in the market, and that looks strong. You could say here on the 30-minute the money flow is a little bit curving down, but to be honest guys, also here on the top this just looks strong. It looks like it has not been topped out yet. 15 minutes, same kind of story. Definitely you would say, Ray, weren't you bearish? Don't you want us to go down because you have been talking about this already for a couple of times? Yes, I do, but I don't want to be caught up in a 6, 7, 8% pump to the upside before we are reversing down to the downside. I have not haven't said like this has to be the top. We can just go a little bit higher, especially if you're just looking here at the trader volume. There barely is any trader volume, and therefore I think like be careful with loading up a short right now if you maybe also have seen this bearish divergence, because you might get wrecked. I will most likely want to see how this plays out. If you put a gun against my head and say, Ray, pick a position right now, I would say long for today, and after that maybe some sideways action, eventually rolling over to go down a little bit. Because let's be honest, since we made this bottom right here at 15,500, we have not really seen a good retrace for a couple of days to reconfirm this bottom or to make a higher low. So that is still something I'm looking out for. But like I said, I don't want to be caught up in a trade. Then quickly on the daily, If we are just kind of zooming out a little bit on the daily level, let's take this out. Actually, not a lot is happening. It's just quite some sideways action. That makes me think that we are slowly transitioning to a little bit of an accumulation sideways phase for the next couple of weeks and months before we are really charging and loading up for a potential bull market. But that will take still way into 2023, so don't get excited yet. But so far, this looks pretty good. If I zoom all the way back in to, where is this? The bear market of, I have to say, the drop. This chart unfortunately doesn't have it. No, okay, so I will show that then different time. But the actual bottom in 2018, that actually also looked on the daily candles a little bit similar to what we have now in this price section right here. Again, not saying that this is the bottom. We still could go down and make maybe a new bottom, but we are kind of close. And Benjamin Cohen, an analyst that I'm also following, said that we just passed 400 days of bear market, which is just shy of the longest bear market ever. So we are or at the bottom or very close to a potential bottom, I would say. These next 2 weeks are probably going to confirm that. Again, if you like the content, please do me a favor, like, subscribe, click the bell, click, and also you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Follow me on Twitter and Instagram, links are in the descriptions, and be very careful at and around the FOMC meeting, because it might get volatile and you might get wigged out. So just be careful with your leverage and with your trading. Thank you guys so much. See you next one. Bye bye.